Hi guys, this is a weekend special. Now, some of you may have observed that recently I've been pretty active with my video recording. Now, because we are now at 890 plus series, right? I'm trying to hit the 900 mark by end of this series. There's a good reason for that. I'll tell you on that day itself. Now, today I'll share with you about Tesla. Now, last week when I covered Tesla and I tell people around me to be careful of Tesla earnings, somebody laugh at me and feel that Tesla earnings will be better. But I said that it's not possible because Tesla have been cutting down their prices of their cars, and that will affect their gross earnings, right? So because of that itself, right, I was proven right. Tesla share came down to 180. So to me itself, a lot of people have been asking me, so now what's next? I tell them we can see a technical rebound to 190, but I feel that 154 could happen if the following things really manifest. I'll tell you a lot this for today's video because there's a big divergence between Tesla and NASDAQ, and this could give us a bit of heads up about the NASDAQ potential downside also. But before we go on that, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, now before we go to Tesla, I'll cover these US bonds again. Now, some people ask me, Kel, so what's the position on the US Treasuries? What do you think? Going up, going down? Now, the thing is this, we must understand this. When the US Treasury, US yield, 10-year yields went up all to 5%, right? I was expecting at least 5.5 to 6% for the tip. But when the moment I realized that Jerome Powell seemingly is saying things, but the market is not reacting, I warn everybody that the US 10-year yield could stop here because we need that so-called inversion to stop. And we also need that the inversion to go back to normality so that technically the recession can happen. Now, I'm not really calling for a recession because I just want to sell the market, but because I feel that now the market is getting two-way expensive. And if we keep on going this right now, it will become a gigantic bubble and it will burst. And when it happens itself, things can get very, very bad for everyone. So that's the reason why I changed my tune. I believe that the yield will come down. And true be told, that was the same time where Bill Ackman also covered his short on the bond market, right? So the market went all the way down, and I gave you a signal around here at the 50% mark that somehow around 3.8% there will be a support. And true be told, it really, really happened. Now, the thing is this. With the market speculating that there will be more rate cuts this year, then the yield should by right go down to lower price. But now Wall Street seemingly has some wind that Jerome Powell and friends may not really want to cut interest rates because from the market, this yield itself tells a lot of story. And one thing to note, the yield is pretty well bought in, controlled by the big boys. So think about this. Look at last week's numbers. The S&P Global US Manufacturing PMI is good. The core durable goods order was good. The GDP estimate was even better, and the new home sales is increasing. So by right itself, we have it's a roaring economy, right? At least for Joe Biden. So if that's the case itself, why would Federal Reserve take the risk to cut interest rate right now, where they have built up so much to curb inflation downwards? Because you can see right now, the core PCE price index have fallen to 2.9. So that's the reason why I cannot see the balance here. If the Federal Reserve cut interest rate right now, just because they are forced to, hence, therefore, inflation goes up again, then whatever they've been building could go back to the wrong side, right? So I don't think so. And the way the yield is moving, right, even confirm my fear. So you look at it right now, right, the only thing that I'm quite worried is the US initial jobless claim, which is hitting now a new high level. So 214, right, you can see that this is like the highest level for the last 3 months, okay? So that's the reason why, again, last 3 weeks, sorry. So this doesn't sell me well. And I think that if this go higher to 220 to 240 itself, right, then the recession bell could kick in. And that is a worse time to cut interest rate because if that happens, inflation will go wild. So overall itself, right, you can see that this is the 20 to 30 years Treasury bond prices. Now you can see that is whereby the bond price came down from 100 to now at 93. And this is a support level I mentioned, and I said that this level can't break. So of course, if let's say the cutting rate start to go in again, I mean people talk about it, then the rate will go high, the bond price will go higher. But if the Federal Reserve really doesn't want to budge, and that will so-called disappoint the market, you will see the bond price coming down. And when that all happens itself, right, the stock market will be affected. All right. So that's something that you must take note of this because you don't want to be caught on the wrong side of the track. Because right now, right, you can see that people are now covering this. the bond yield rise on Fed's not rushing to ease. That means that they're betting Fed not to ease so fast. Because a lot of people expect Fed to basically cut interest rate as early as March, but there's ongoing thing saying that right, this may not be happening. And if it doesn't happen, things will get worse. And of course, if this happens, then the one stock in particular I'm watching it very closely will be this counter called Tesla. Now let's go back into AI first. Now remember, Elon Musk was pretty afraid on the acceleration of the growth of the AI market. And in fact itself, he said and warned before, AI, the growth is too fast and things will get too scary. But again, we have been seeing that this Elon Musk seemingly is everywhere with this so-called interesting buddy. Okay, all right. So apparently this is that Elon Musk's new AI girlfriend is going everywhere viral, right? So let's talk about this AI first. So first of all, Elon Musk recently came out and said he's uncomfortable growing Tesla to be a leader in AI and robotics without having more than 25% voting rights. Okay. Now, he's enough to be influential, but not so much that I can't be overturned. And he has seen this before, right, previously. So the thing is right now, right, if Elon Musk is so into AI and he doesn't get more voting power, then of course he's probably going to put this counter called Tesla away. And that's probably one of the reasons why you see Tesla shares are not performing. So of course, we can see that Tesla has been putting a lot of effort into AI, and you can see that a lot of resources are going to that. And of course, this will definitely change our life in the next 5 to 10 years. But the thing is this, what will happen to the Tesla shareholders? Well, remember this, 1 year ago, I covered this about this angry Tesla owner jumping on a Tesla during an auto show in Shanghai. Yes, indeed, remember I showed you about her. Now, a lot of people thought it's a publicity stunt. No, it wasn't. Because why? Because people are pretty upset. They went to Chengdu to vandalize the Tesla stores. They basically demanded the merchant to meet them and stuff like that, because it's like crazy. You don't just sell me a price for a car and then the next 1-2 months you lower price again, and after a few more months you lower again. Now this will not gel well, because I haven't get my car yet and the price came down more than 10-20,000. So people are pretty upset, and because of that itself, right, there are many reasons why I believe Tesla share could go lower. Let's go to them. Now, first of all, it's all right. Ever since Elon Musk came out, okay, to warn about the sales earning, the share price gapped down all the way from 208 all the way to 180, and that's basically erased about nearly $80 billion in valuation. Now, I just want to question this itself. I just really wonder, is it really done by him himself? Now, the thing is this, probably sometimes in business itself, right, if your shareholders doesn't really give you what you want, sometimes you just have to play a different game, right? What do you think? All right, so let me know in the comment box, yeah? Now, one thing is that now we are very sure with the earnings not doing well right now, even though growth is increasing, but that is not go good. And of course, you can see that the people are ordering Tesla is getting lesser and lesser. And of course, their profit earning from each car itself from 29% all the way has dropped to 17.6%. Now, that's a lot of money, right? That means that the earnings are not getting there. And because of that itself, is because of this, they keep on reviewing the new price and lowering the price. I know that they want to get market share, but when you do a market share, when you try to fight this way itself, right, then you have a problem, because if other competitors also do that, we can basically try to squeeze them. But the thing is this, as a big company like Tesla itself, they may not be able to take it too much. And of course, if the stock price go lower, things will get even worse. So because of that itself, right, we really have a big issue for Tesla. And we look at the numbers right now, you can see very clearly the operating expenses have increased by 27%, but their gross profit has lost 23%. Wow. The operating margin from 16% has dropped to 88.2%. So again, everything cuts by half. And because of that itself, this could really send Tesla the wrong side. So in fact, I said this for the last video, I do expect a technical rebound, because this is where usually Tesla hit the RSI at 30, there will be a rebound, there will be a rebound, and so forth. So everyone is expecting a rebound to come last Friday, but it didn't. So let's say now we do a hypothesis. If the market do recover, I think about 195 will be the max top, I say. Then it may come down to re-challenge 180. And when that all happens itself, guys, 154 could be next. Okay, this is no joking matter, because it can really happen. So what could be the reason other than technical? Well, of course, it's the fundamental reason. Let me bring it to you right now. Now, first of all, it's all right. The demand in US, Europe, and China is not optimistic. The interest rate remains doubly high. We all know that, making it very difficult to stimulate demand even with rate cuts. Now, for Europe itself, worse than the US, the rate cuts will come much later, that's for sure, and the economy is getting worse. For China, the recent property market, the banking sector, the economic itself is not doing well. Seriously, with the EVs competitors doing better because they can lower down the price lower, this is going to bring a lot of problem for Tesla, and this is not going to go well. And of course, not only that, there are one more very big thing is the subsidies, all right? Now, we all know that during the time when the government wants people to buy EVs, a lot of government like US, wanted to subsidize this for car owners. But due to the batteries made in China, obviously a bad move, right? For Model 3, it doesn't qualify for the 7,500 subsidy. And some banks, financial institutions says that, right, this could lead to a 25% decrease in demand for Tesla. Oh my God. Now, Germany, they have canceled the 4,500 electric vehicle subsidy in 2023. And of course, France and UK has partially eliminated the subsidies. So again, if people start to realize that, hey, there's no perk to basically go for EVs, right? EV market will go down lower, and this is not going to be fun. And now we all know that Model 3 is kind of like a point of like, no longer in the demand. And they are this Cybertruck itself, right? They try to do it, but apparently the take-up rate is very little. And their Model 2 will only be out in this 2025. So think about this, what will happen to Tesla shares? All right, so to make it easier for you to understand this right now, you can see why I see this divergence. Now you can see that the one in blue is the NASDAQ, the one in candlestick is the Tesla. You can see that almost every time the two of them, when they get together, so it's incredible chemistry. Look at it. So in short, when the two goes up together, they come down together, excellent. They bottom out together, beautiful. They tip the top together, and this pinpoint, guys, it's really crazy. So remember that this is whereby the Chinese lady was jumping on a Tesla. Back then, there was a low end for the Tesla shares, okay, about basically below 109. But I think the NASDAQ went all the way up, hence therefore you can see that the Tesla followed. Then after that, there was some profit taken in NASDAQ, so did Tesla. But the point is this, in November, we all know that the funds start to realize that Tesla earnings may not be fantastic. So a lot of companies have to ship out from Tesla and concentrate on the Magnificent 7 counters. And that's where the NASDAQ goes all the way up. But the thing is this, Tesla tried to follow a little bit because the NASDAQ went out quite a fair bit, right? But once hit 265, that's it. It couldn't go higher. And then that's whereby after that, the stock plunged. So the thing is this, I just wondering out loud, if there's going to be any profit taking for NASDAQ because of whatever reason, because of maybe no more rate cut, because NASDAQ is buoyant by rate cuts, right? If the NASDAQ don't get what they want and there's some selling on the NASDAQ, the question mark is how low Tesla will go. Do you think that Tesla will rebound instead, or you think that Tesla will sell down instead? Let me know in the comment box. I'd love to hear from you. So I repeat myself again before we go off this video. Based on RSI, by default, we have seen this before, Tesla usually will rebound, okay? I'm not going to fault that. But the thing is this, for what I shared this evening, if those things really continue to happen and there's no reprieve from that, then I think that Tesla going to 154 is just going to matter of weeks. All right, till then again, like, subscribe, and share my video. This is Kelvin signing off. Bye-bye.